Good morning. There we go. Good morning. Today is March 20th, 2022. Um, and it is a beautiful, beautiful day, actually. It's the first day of spring. And since spring has sprung, it's a good time to, of course, get outside. To try and get outside and celebrate and enjoy the nice weather that we've been having for most of this week, actually. Obviously, things are starting to warm up and the season is starting to change. And, well, that's phenomenal. One, because winter, in my opinion, kind of sucks. And two, because springtime is the beginning of real estate season. So we're going to get to see what the last few months of events in the world, we're going to get to see what, if any, impact those are having on the real estate market here in Southern Ontario, which is, of course, good because you need feedback from the marketplace to really know what's going on and know how to make decisions. So because it's the start of spring, and because that marks the beginning of kind of real estate season, I wanted to talk a little bit about taking action this week. I think that a lot of us, myself included, get caught up when it comes to taking action on sort of the distractions. That's what I'd call them, the distractions. How do I put this? I was just listening to Tony Robbins this morning while I was getting ready for the seminar. Sometimes I just put on a YouTube video and I'll listen. And Tony Robbins is he's a lot. If you're familiar with his stuff, he's a little extra, and he's very general. He doesn't have a specific lane that he's in. That being said, he is very successful, both as a, what do you call him, motivational speaker, I guess, and as a businessman, independent of his self-improvement businesses. And so I think he's a pretty fascinating guy because he's been very successful outside of the seminar businesses, and obviously he's been incredibly successful as that seminar guru guy, Tony Robbins, right? But anyways, he was saying that we live our beliefs, right? That we build an identity about ourselves, the things that we tell ourselves, and then we live that identity. And you see this with fat people or athletic people or dancers or things where really the choices manifest themselves physically, right? So in his specific example, he was saying that you have an athlete, or you'll have athletes come to his seminar, and he will ask the people at his seminar, who works out, right, regularly or whatever, right? And the athletes, of course, will put up their hands. They'll work out 3, 4, 5 times a week, whatever it is, to maintain their physical ability and capability, right? And he points out that those athletes in air quotes, because maybe they're just bodybuilders or whatever, but these people who have this focus and this emphasis on being in good physical condition, taking care of their physical conditioning, so to speak. He says, well, those people don't have any more time in the day than all the people who aren't committed to physical fitness. So why is it that they show up to the seminar and they are physically fit when everybody else is more average, right? And of course, the reason is because physical fitness is a priority for these people, right? Because in their lives, they are choosing to take action that will maintain their physical fitness and their physical conditioning. And they are making choices. They are sacrificing other things to make sure that this happens because they have priorities, right? They've got 24 hours in the day like everybody else. And they have decided that one of those hours will have to be physical activity. Period, full stop, no compromises, right? And so 1 hour out of those 24 is set aside, let's say, 5 days a week to focus on their physical fitness. And you get to physically see the result, which is a fit person, a fit body, a capable person. That's the outcome of these choices made over time, right? And this is this is kind of a very important thing to understand, right? That is all of the power in life right there, right? Identified in this 24 hours schedule. We all live our lives 24. Well, actually, we all live our lives a moment at a time, but let's break it down. Usually we all have the capacity to plan for and understand and work through a day, right? Beginning, middle, and end. You can envision an entire day, all 24 hours of it, what time you'll get up, what time you'll brush your teeth, what you'll have for breakfast, etc., etc., etc. We all live our lives like that. The difference between, myself and, let's say, well, he's retired now, but let's say like a Wayne Rooney or a LeBron James or I don't know, Will Smith, right? These various and Elon Musk, because he's my favorite. God mentioned Elon Musk. What's the difference between all of these various people? Well, obviously, everybody I mentioned, except for myself, is wildly, wildly successful. But the fact of the matter is that Wayne Rooney's got the same 24 hours in a day as I do, right? And Wayne Rooney's obviously had worked very, very hard to have the football career that he had. And I don't know how much older than me he is. I think it's about 5 or 10 years. He's a bit older. Anyways, obviously that hard work resulted in a fantastic football career. Now, I don't know how much time Wayne Rooney put into his career prior to becoming a professional. But I know once he became a professional, it became like a 40-hour-a-week obsession, right? Maybe even more hours than that. Not because I know anything special about Wayne Rooney, but just that's the job. You're a professional football player. So you spend 40 hours a week, roughly, working on your skills, your body, your conditioning, the various things that you need to compete at that level. The interesting thing, I guess, I would say about Wayne Rooney or people like him is, if I spent 40 hours a week exercising, conditioning, and training his soccer skills, football skills, whatever we want to call them, I would probably be able to compete with Wayne Rooney, right? And in fact, since I'm physically larger than he is, I might even be able to body the man. I don't know, right? Now, I never did that. I can't compete with Wayne Rooney. He's a far better football player and athlete than I'll probably ever be, because it was not necessarily something that was ever drew me, that ever called to me, oh, I want to be a football star. I never wanted that, right? But this is the thing, right? If you prioritize those things and you put the time into it, in theory, you're going to achieve at a similar level as the people who are doing it, right? And if this weren't the case, then we would not have schools, we would not have academies, we would not have universities. There'd be no point in teaching people things, because you would not be able to emulate the success of others, right? And yet, obviously, that's not true, right? You can go work out with a bodybuilder and they can get you in the bodybuilding shape. You can work out with a footballer and they can get you in the footballing shape. You can hang out with an architect and they can show you how to build a building, right? The question becomes, what is your priority, right? What is the thing that you are going to focus on, that you're going to emphasize? Now, when we bring this around to real estate investing, or perhaps just investing in general, right? Obviously, there's an aspect of, you spend time in mentorship and following people who've, flown the course before you, right? Excuse me. But there's another aspect that I think goes relatively ignored by a lot of people. That is the practice. In sports, I'm going to go back to football. I played soccer as a kid for sure. And, you'd have soccer and you'd have soccer practices, and you would also play like pickup and have fun, right? So soccer is obviously a game. It's a sport, whatever. It's fun. You don't need a lot of motivation to do it. Most people don't anyways. And so soccer happens, whatever. The thing you'd always notice is if you went to your soccer practices, there were a lot fewer kids at the soccer practices. You see, everybody could motivate themselves to go do the thing that was fun, i.e. play soccer, right? But substantially fewer of those people could motivate themselves to do the thing that actually got you somewhere, which was practice soccer. Now, I'm not saying you need to, have like an actual soccer practice where you're running around passing the ball, although that is beneficial. Your practice might just be in playing more scrimmages and pickup games, right? But ultimately, if you try to make it to a certain level, right, as a footballer, maybe get into the academy system or something like that, by and large, you're going to have to spend time practicing specific skills and getting them up to a level of competency where you don't have to think about them. And you will not be able to do that by playing soccer games. You just won't. I have friends who went to the academy system. I know for a fact you're going to spend time drilling. You just have to, because the level of what's the word I'm looking for here? The level of execution that these athletes have at the highest level is so rote. I wanted to say perfect. It's not perfect, but it's rote, right? They're so used to doing it. They're so well practiced at doing it, right? That it's almost perfect. And so for you to compete, you must be the same way. And so that just requires a lot of practice, right? Now, the great thing is that athletics, much, much, much more competitive than investing. Just funny, because you would think people would fight harder for money than they would for that. But you know what? Athletics is the combination of money and status, and that is more attractive to people than just money alone. You could argue it's a few other things as well. The sports achievement that investing isn't. So it has a lot more attention on it, right? Obviously. And so it's much, much, much more competitive. To be a good investor, you don't need to be at Wayne Rooney's level of conditioning, fitness, skill, consistency. You don't need those things. You do need to work to practice, but not at that level. And that's what's beautiful. To be honest with you, for anybody who wants to have just a good life, nothing great, nothing incredible, just good. If you do one real estate investing activity per year, just one, you will probably end up with a pretty good life. Even if you, pardon me, even if you listen to these seminars, maybe you buy some Rich Dad books, or you go to Keyspire Summit or whatever, I don't know, you do some real estate stuff, spend some money, whatever. Even if you do all that and you only buy a house like once every 5 years, I'm just thinking, how old am I? I'm 30 something. So let's just say a house every 5 years until you're 60. So at my current age, that'd be about 6 houses in total that I'd be able to buy myself. Well, I guess it'd be 5, but because I'm past 30. But whatever. We'll call it 6. Okay. One house every 5 years. Was that an achievable goal? I think it's pretty achievable. It's saving $20,000 a year if you're going to make $100,000 down payment every 5 years, which sounds hard, but really that first year, the first house is the hardest, because the second house, you've got the first house helping you to build up that down payment, right? So that's all that is, right? It's saving up a down payment once every 5 years and buying a house. Where would you end up if you did this? Well, approximately every 5 years, you would add, let's just call it a cash flow neutral asset. Let's just say you buy a house that pays for itself, but it doesn't pay you anything. All right. Well, at the end of this 30-year period, you would have one house that you own free and clear, right? This house would have absolutely no debt on it. You'd have paid it all the way down, or at least you theoretically could have. You may have refinanced it at this point, right? You have a second house. Depending on the mortgage term you went for, you might have gone for a 25-year term on that second house. Now, that second house is also going to be paid off, or at least could have been paid off over that time, right? You'll have taken all that principal recapture if you didn't pay it off, and you'll have paid yourself with it. And then you'll have 4 more houses in various states of being paid off, some as close as 5 years away from being paid off, and one as far as 20 years away from being paid off, right? Well, you have all of those houses. So you'd have 6 houses. And, even if we assume that you refinance them every single time, so you don't have any equity in any of them, they're all 80-20, right? my goodness, they're all 80-20 deposit to mortgage, right? Down payment to mortgage ratio, what I'm trying to say. Even in that scenario, I don't know what the value of these houses is going to be. I guess I said you're going to put $100,000 down on each one. So about $500,000 in value. So first of all, you've got 6 of them, $500,000 in value each, right? That's $3 billion worth of value, right? And then obviously you don't have most of that because most of it, it's 80-20. So 80% of it's the bank's value. So you can't get too excited about that. But at the same time, right, if we do passive appreciation of, I don't know, let's say $2 million, I'm so sorry. Let's say 2% of $3 million, right? So that's just the principal recapture from those properties. Then having bought only one property per year, per 5 years for the next 30 years of your life, you would have a passive income just from the passive appreciation. So we're not including if you could develop some kind of cash flow, which of course your 30-year-old house, you would obviously have cash flow on, probably even the 25-year-old, probably even the 20-year-old house, right? Maybe not the 5-year-old house, but all the others you're going to probably have cash flow on, right? But if we ignore the cash flow, just passive appreciation at 2% per year, buying each house for $100,000 down, $500,000 total valuation. And this is of course assuming that none of them went up over the years in appreciation, which is obviously not the case either. But let's just say you'd be sitting on $60,000 per year of income, right? At 60 years old, in addition to your job or whatever, right? Now, in Canada, the average income, I haven't checked the figures lately, and they probably have changed quite dramatically with COVID because we kind of reconstituted our economy throughout that whole thing. So things are probably a little different than they used to be. But the average single person income in Canada used to be about $40,000. Used to be about $40,000 per person. So just by taking, relatively casual action, you could end up making $60,000 per year from just one of the 4 income streams that we know that real estate has. And you'd end up about 50% ahead of the average. Now, of course, 30 years from now, that won't be the average, and inflation and yada, yada. There's a lot of factors that make this a more complicated recipe than I'm making it out to be. The point that I'm trying to make is not one about how simple or complex the math gets to accurately predict the future. Spoiler, it gets complicated. Predicting the future is hard. No, the purpose of what I'm saying is to point to the principle of repetition, of focus, right, and of priorities, right? The purpose here is to say that, like the bodybuilder who maybe doesn't go to the gym every day and have a perfect set, right? There are days where they're feeling tired or they're lazy or their muscles are sore, and so their workout routine is not quote unquote perfect, right? But they show up and they do the work, and lo and behold, over time, they build their body. Real estate investing is the same way, right? It is very easy, and I think it's very common in the world of investing for people to look for the unicorn, the winner, well, I have a deal like that, right? I've told you guys about buying a property for no money down, and how we made that work, and the deal makes me smile. It brings a smile on my face every time I think of it. It's the unicorn deal, right? It's that deal that like you can sit down at any given dinner table and you tell people, I bought a house for no money down. Everybody will kind of stop what they're doing and look at you and be like, what the hell are you talking about? You bought a house for no money down? So it's interesting. That's the things that gets people's attention. But really and truly, that's not the thing that gets you success. I mean, don't get me wrong, if you buy a bunch of those no money down deals, you will end up ahead. But the thing that gets you ahead is the commitment to doing the work, the commitment to staying the course, the commitment to growing your skills and yourself and dedicating your time, some small proportion of it, consistently towards your goal or your aim, right? In this case, if it's real estate investing, I'd like to put a focus. So I'd like to put a focus on real estate investing, not in my life, in your lives. I have a focus on real estate investing in my life. I spend every week thinking about the seminar, even if I don't always do the best prep for it. I do the seminar every week. I analyze properties, both for my own purposes and for the seminar. every single week, right? And what is the purpose of this, right? Well, I mean, it's multiple things, right? For starters, you're paying attention to the market and you're learning the market, right? And that's important. The other day, I got a listing. Actually, do I have this? I might have the listing. Wait, do I have it on my computer? Sorry, I'm just gonna check real quick because I thought that this listing got sent to me very recently. Yes, it did. Yes. So I'm gonna show this to you right now. So hold on, I have to stop sharing, and then I have to share again, but the whole screen. Just a second. Bear with me. Okay, I want to show you this listing. Just real quick, I'll just share this with you. So that's my whole computer screen. Yeah, if you can't see, that's okay. But here is an email I got. Don't mind my email inbox. I get too many emails. Here and here you can download the pictures. So it's fine. So here's an email I received. It is from a wholesaler. This wholesaler does what wholesalers do, right? They lock up properties under contract and then they try and sell them to people. And I'm an investor on their list, so they send me the deal. And this right here is 338 Hamilton Road in London, Ontario for $577,500. Assignment fee is included at that price. Okay. Available again. We're doing a 2-day only price drop on this building. If you want it, respond to the email with deals with a Z. And if you would like in on this deal, just let me know. I'll send you the email. You can have it. This property right here. Can I show you the picture? Damn it, the picture is really tiny. Okay, maybe I can't show you the part I wanted to show you, but it doesn't matter. There's a picture of the property. We made an offer on this house 3.5 years ago. This is in London. I don't know if any of you know where Armando's house in London is, but this is not too far. I don't remember the exact geography because London I'm not super duper good with, but it was like 5 minutes. I want to say either north or east of where Armando's place is because they're kind of in the downtown core, and this was more out towards the edges there. The property was not in very good condition at the time we looked at it. I think we maybe offered like 275 on like a 324 ask or something like that. Yeah. I don't remember the specific details. And unfortunately, I don't have an analysis for this property. I guess we didn't analyze it that way. We must have done it by pen and paper or something. But this is a property that we looked at. And like I said, I just told you the price, right? We offered, I'm not remembering the specifics now because it was almost 4 years ago, but we offered somewhere around that like 275 to 300K range. Didn't get it. 324, I think, was what they wanted. I don't remember what it sold for or when it sold. I just know we didn't get it, and we kind of were only half interested, so we didn't really chase it down too much or follow it up because this was right around the time when we were kind of pivoting and looking at Sudbury. We kind of gotten frustrated with London and decided that we were going to go to Sudbury. I want to point some things out to you right away. Okay, first things first. At $324,000 or whatever it was, let's even call it $350,000. Hell, let's call it $400,000. How would I have done on this property? This is a wholesaler. So in theory, they're leaving money on the table, right? Because they have to leave money in the deal for the person who buys it off them. So really, this wholesaler is saying they think the property is worth, well, there it is right there. They think the property is worth $760,000 if it's fully renovated and taken care of. So was I smart not to spend my $274,000 on this property? It's not a question that you can answer. I haven't given you enough information, right? You need to know what the alternatives were, how I did in my alternatives, right? If the alternative was not investing, then hell yeah, I would have done really, really well. And this is something that everybody needs to understand about investing. It's one of the important things, I think, is investors have to compare themselves in order to know how well they're doing, essentially. Not necessarily to each other. They might just compare themselves to themselves last year, right? Like this year versus last year, I want my income to be up, my expenses to be, well, I actually don't care. Ideally, I want my income to be up and my expenses to be down, right? I'd also like my debt to go up and my debt to equity to go down, right? So I'd like to be borrowing more, buying more things while having those things appreciate and paying down the debt so that my equity is growing, right? And my expenses are shrinking while my income is growing. These are all the things that the person desires year over year, right? And one of the things I think that is very important for people to understand about real estate, or really any investing, this is true of all investing, because this is true of economics. This is economic theory 101, if you will. Life is about choosing between alternates, right? You could sit down this morning and you can listen to me talk to you about real estate and investing, or you could sleep in an extra hour, or you could have watched Sunday morning cartoons. I don't know, is that a thing? I guess, whatever. Or you could watch a church TV, or you could go to church, or you could do your grocery shopping, right? There's obviously a million and one things you could do with this time. You're making a choice about how to allocate this time, right? It's the same thing with investing and generally economics, right? You're making choices. If you have $100,000, you can't buy everything that costs $100,000. You have to pick one thing, right? And so this is where the investing game gets very, very interesting. Or maybe it doesn't. Maybe it's boring to you. I think it's interesting. If you take your $100,000 and you buy a property that appreciates at 5% per year, did you do well? Sorry to say. I mean, 5% per year, $100,000. What is that? That's $5,000 a year. Or if we say your $100,000 is the down payment, then it's a $500,000 house. So 5% of that would be $25,000 a year. Okay. It sounds good, I think. Maybe. Could you have spent that $100,000 on something that paid 10% per year, or 15 or 20? Because your 5% is not very good if you had an alternative that could pay you 20. But your 5% is incredible if your alternative paid you 0. Right? And so this is a very important thing that people need to understand about investing in general, is that when you start, your alternatives are 0. And so it's quite easy to take action, because almost anything you do, with the exception of losing money, is better than the alternative, right? As you start to deploy your resources and you run out of money that you can spend, right, in investments, then the question becomes, well, what are my alternatives? Because if this property is paying me 5% per year, maybe I can find a 15% property, and I'd want to flip out of this one into that one and take the spread, right? I think far too often people get caught up, I want to have the perfect deal. The perfect deal has to be the best deal. It has to be the best deal from day one. I'm going to get the best deal and do the best things with it. And you spend a lot of time worrying about buying a quote-unquote bad deal. Meanwhile, you're not comparing your alternatives, which is you currently don't have your money invested, so you should get it. You should get it put to work, and then you can worry about how efficiently it is working once it is at work. Because one of the things that's going to trip people up is you might act and say, "Oh well, I want to get into the highest and best investment deal that I can," and I hear Aaron talking about these 0 money down, infinite return on investment deal. I want one of those, right? I got my whatever $100,000. I want one of those. It doesn't really work like that, unfortunately. In order to be able to do a $0 down investment, we had to already have existing investments in place. That was the only way to make it work, right? And then basically we were playing the alternative game with our lender, which is our lender says, I want to secure my loan. Let me put a lien or a charge, a mortgage, on your property. And we said, oh, well, you can't do that. There's no money in the property. But you can put the charge somewhere else if you're comfortable with that. There's an alternative available to you. You put the money over there, and then I'm going to use your money to buy this thing. Are you cool with that? And that's essentially how that conversation went, and that they were cool with that. And they'd be cool with you doing that too if you put yourself in that situation, right? But you have to understand, right, that came as an alternative, right? Essentially, we had because it wasn't my property. We had equity in that property, right? That could be accessed. That was sitting there doing nothing. It was paying us a 0% return, doing nothing, just sitting there as equity. And so by looking at this deal and then looking at the alternatives, we saw, well, hey, there's money here, sitting here as equity. It's doing nothing, 0% return. We could leverage that money to go buy a property that we expect to pay 15% per year, right? And then even though the leverage will cost us, yes, 10%, right? Because the return is 15, we're going to make a profit that first year. And then we're going to pay that loan off, and we're going to get a more traditional loan at 2 or 3%. And now we're going to be making the cake, which is more or less how that deal went. Although I just got notice when my tenants is moving out, so that house is back to being cash flow neutral for a little bit. But I'm sure we'll get them replaced in no time. But that's it, right? It's a game of alternatives, right? And it's also a game of practice, right? So getting involved, finding the opportunities, right? And then understanding, first you get involved and you find opportunities, okay? Don't worry too much yet about whether or not they're the best opportunities. You just make sure that they're secure. That is, you are unlikely to lose your money in the long term. What I mean by that is that there's nothing guaranteed in investing. Well, that's actually not true. Things can be guaranteed in investing. At the level that you're at, right? At the level that I am at, where I don't have millions and millions of dollars to throw around on sure things, which is absolutely possible when you have that kind of money. Things are not guaranteed because I'm not betting on sure things. And it's very, very hard to, when you don't have enough money, to attract the interest of the people who can generate those sure things for you. Although they do exist, right? Like, make no mistake, there are investments that, nothing in life is guaranteed, but Warren Buffett, for example, the way he invests, and I've talked to you about this before, about the way he options trades. I mean, Warren Buffett buys companies where the day he paid for them, he got a 10% discount on what they're worth, on what you and I would have to pay for them. So in theory, he could immediately sell them for a 10% profit. Right? So there are sure things in that respect and in that regard. That kind of stuff can happen, but it takes time to get to that level, right? Again, it's an alternative to kind of a thing, right? And when you're at the ground floor, that's not an alternative that's usually available to you, right? But if you spend time and you put in the reps, and me, I like to measure my reps in terms of weeks, because there's 52 weeks in a year. An average work year is 50 weeks, right? We take 2 weeks off of vacation. It's kind of a standard work week. And so it's a very easy and manageable known quantity. You've got 7 days per week to accomplish this thing. You set a small goal or a big goal, whatever you want. And you move things along. Personally, my goal, usually, the goal that I encourage people to go after is make an offer a week. Really, you should make an offer every day. But, if you make an offer a week, then you're making 52 offers a year. That's 100 offers every 2 years. And for every 100 offers that you make, I bet you 1% of them will be good deals. Now, maybe 20% of them will be good deals. Depends on you and what kind of offers you make. But I'm pretty confident that at least 1% of them will be good deals. So in the worst case scenario, once every 2 years, you'll come across a property that'll make you money. Okay. If once every 2 years you come across property that make you $100,000 in a year and a half or 2 years, then that's almost $50,000 a year of income that you can add every other year, right? And you can see how that would snowball out of control in 10 or 15 years, right? And all it requires is for you to look at, I don't know, how many properties do you really need to look at to make an offer every week? It's going to depend on your market knowledge, of course. When you're first starting out and you maybe don't know the market very well and you don't know what you're looking at, what prices to pick, you're going to need to do some research. You might need to go on CMHC. You might need to check property tax rolls. You might need to go on and check rental rates, right? And so it might be a little time consuming at the beginning. At the beginning, you might set aside an hour or two, right, to really be able to produce one offer. But then when you've been looking at the market for a few months and you've been making an offer every single week like that, after a couple of months, you sit down, you know the rents, you know the taxes, you know the neighborhoods. So really, it's just a matter of looking at this property, figuring out how much rent you think you can get for it, and making your offer. You might be able to do it in 5-10 minutes, right? And now you can just crank out offers, offer after offer after offer, right? Because I was telling I was speaking to somebody about this before. There's some books behind me. I don't know if you can see them. These 3 books here. Those are all publicly. I know the author of these 3 books, so they published these books, and they did a, what do you call it? Not a seminar, but a like a reading. They did a book reading. So these 3 books here. These are 2 adult books. These 2 here, they're like dramas, and then this one here is a children's book. When can we get a puppy? Anyways, they did a reading for their children's book not too long ago. So they brought books to sell, in case anybody wanted a copy of the book. Right? And the book's available on Amazon. You can buy the book. You don't need to go to the reading to get it. But, if anybody came to the reading with their kid, whatever, and the kid likes the book, they can buy the book, right? I don't know, $12, whatever it is. And so I'm speaking to this author, and, they're, what's the word I'm looking for? They're an entrepreneur, right? They're an amateur. They're not J.K. Rowling or Stephen King or something like that, right? They're just a person, just a normal person who's writing was their passion. Is something that they want to do, right? So they're talking to me about doing this book reading, and how many books should they bring and what price should they set, and should they give them a discount? And they're worried that nobody's going to want to buy their books, so they want to give it a discount, and And I had to stop them. I had to stop them, sit them down and say, obviously I can't tell you what to do. I'm not an author. I've never published anything in my life. I don't know anything about selling books other than I've occasionally bought some. But I do know a little bit about business in the marketplace, and I need to explain something to you. We have a problem in our society today. I mean, that's obvious, I think, probably. And actually, even just saying that then raises the question, well, which problem, Aaron? Because there seem to be a lot of them. The specific problem I'm talking about is economic illiteracy. People don't understand how the market and how the economy work. And specifically, they've become enamored with this pseudo-religious idea, this sort of priestly idea of like divine revelation, wherein the market is a place where really I'm going to use kind of the words of the layman. So these aren't my words, but they aren't, right? The market is this sort of magical place where these sages and soothsayers go to divine what the price of goods should be so that they can sell them to the masses. And that's what people think. And they think, for example, that you develop a product, right? And then because you've developed that product, you determine what the price is going to be based on how much profit you want to make, and then you sell it to people. Okay? That is not how the economy works at all. And it is a fundamentally flawed understanding of the world that we live in that will cause you to fail. The market is not full of diviners and soothsayers. The market is a place of trial and error. That is, it is impossible to know ahead of time what the market will do. That is the purpose of a market. The purpose of a market is to tell us what people will do, what choices they will make, because we're incapable of predicting it for itself. The whole function of a market is to allocate supply and demand, right? And it does this through the voluntary exchange of goods between individuals, which then signals to everybody else what the supply and demand in a given marketplace is. And so when you sit down and you say, I don't know if I should bring 12 or 20 copies of my book to sell, you are asking the wrong question, because the market determines how many of your book you are going to sell. And you, unless you know the market really well, and it is possible to research markets. I don't want to sit here and pretend like markets are opaque things you can't see, but unless you know a market really well, it's very difficult to predict what volume of sales you're going to have in a given marketplace because you don't know. And of course, those things are malleable, right? Because there are a lot of variables that go into it. And so this is a very important lesson that we need to learn. We need to understand on the reverse, right? On the buying side, right? I talk about being a seller of a book, but if you're a buyer of a property or an investment property, right? It's very easy to look at the market and to say, oh, well, my offer won't be accepted at this price, or, oh, I can't buy this property for this amount of money, or X, Y, Z thing. They won't accept this offer, blah, 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 whatever. And the answer is, of course, you don't know. You don't know until you make the offer and they reject it, because you might be surprised. Things can happen, that are unbelievable. There's a house selling up the street from me. just got listed a few days ago for $2.8 million. This is ostensibly a $1.5 million neighborhood, maybe even a $2 million neighborhood, like in the last 6 months or so. Maybe. This is not a $2.8 million neighborhood. No, not today, not yesterday, probably not 6 months from now. The price is too damn high. Doesn't matter. This person listed the house for $2.8 million. They're allowed to list it at whatever the hell they want. And if somebody's stupid enough to come and buy it, then this might just become a $2.8 million neighborhood. You see, this is not a $2.8 million neighborhood until the first house sells for $2.8 million, and then all of a sudden it is, right? Now, conversely, this could be $1 million neighborhood, and the prices are sliding, and all the houses here were bought for $1 million, but now the price slides, and the next one sells for $800,000. And now that will set the anchor point that we all look at in future and say, oh, well, this is an $800,000 neighborhood. Now, I wouldn't pay $1 million for a house there. The best way to avoid being blindsided by these changes in the marketplace is to consistently make offers to test the market, essentially, right? Throw something in the water and see if you get a nibble. And understand that, like the world of baseball, like the world of meeting women, like the world of, really like almost all things in life, it's mostly going to be no. It's mostly going to be rejection. It's mostly going to be, well, hopefully not disappointment, because hopefully you're not getting your hopes up too high. Right? You're just making offers. But that's what life consists of. Right? There's a lot of no's before you get to a yes for most things. And real estate investing is absolutely no different. There are a few different approaches. Some people try to calibrate themselves to a market so well that all their offers get accepted. And technically speaking, if all of your offers get accepted, you're probably doing a good job pricing your product. But on the flip side, I would argue you're not being aggressive enough, because nobody's ever saying no. That means you're always making a deal that the buyer feels is favorable to them. And you know where I want my deals to be, like in a perfect world. I mean, actually, in a perfect world, I'd make offers that are favorable to my sellers, but they would still be profitable to me. That's a perfect world. The next best thing is I'll make a deal that my seller doesn't really like, but it's right on the edge of what they're willing to accept. And maybe they'll negotiate with me back and forth a little bit to bring up my offer a little bit, but ultimately we'll settle somewhere right on the edge of the seller's comfort, right? Seems fair to me, because as a buyer, I know I'm on the edge of my comfort. Right, whatever price I agree to pay for something, it was too damn high, right? And I wish I could have saved a little bit more money. So if I've got to be on the edge of my comfort buying your thing, you should be at the edge of your comfort selling it to me, right? And the only way that we can get there is if we're making offers, right? So I know I've been a little repetitive on the offer front there, but stop presenting. There we go. But I do think it's very valuable to understand, like, the success comes from the repetition, right? It doesn't come from the big-brained, ingenious move that you make the one time or the two times. You know, one of the things, again, I was saying earlier about investors and the things that people are enamored with, right? Everybody loves to hear about that time. Oh, I bought this stock. I bought this stock for $11.60. And 8 months later, it was 10x. Sold it for $109.33. Everybody loves that story. That's a real story. I did that. Take-Two Interactive software before the launch of Grand Theft Auto 5. Real thing. Did that investment. Made lots of money. Shame I lost a bunch of it on a silver mine stock investment afterwards. It's the nature of investing. You make lots of money and you can lose it like an idiot. And I have made money and I have lost it like an idiot. I've done both. And it's one of the reasons I'm not a big stock investor, because I never really figured out how to be consistent. I did learn how to see an opportunity and make money on it, and then I learned how to burn a lot of the money on a bad investment too. So stocks have never been super appealing to me, but that is an exciting story. It's like, oh wow, well you turned, I don't know. In that case, I think I turned either $5,000 or $10,000 into close to 60 or 70. It was a good deal. It's a good deal. I am no better off having made that deal. I did that deal a long time ago. Obviously, Grand Theft Auto 5 is like 8 years old now. And I am really no better off in my life because I made that money, because I managed to lose most of it pretty quickly. And so one of the things that a lot of people gets focused on is, oh, as an investor, tell me about that time you made a lot of money. And it's like, that's not very interesting. It's actually not hard to make a lot of money. I've made more money than that since then on better investments that I haven't lost money on. So even though that sounds like it's a relatively impressive investment, and it was for a 20-year-old kid or whatever I was at the time, it really isn't that good. Right? The much more interesting question, and if you're ever talking to people and they're telling you about how they're investors and they invest in this or they invest in that, and you want to really get a sense for, you want to evaluate just whether there's somebody you should listen to or not, tell me about the time that you would have lost money, but through your investing activities, you mitigated disaster. What did you do to avoid losing money? Every idiot can make a good bet and get lucky, and everybody can go in and put for $50 on 27 at the roulette table. And if you do it enough times, eventually you will hit. Right? The question is, can you walk away from that roulette table every time up $20? Right? That's a much more impressive question. And of course, for most people, the answer is no, they can't. They leave the roulette table negative $20, right? Or they leave the stock table or what have you. Right. And so that really is the thing, right? Here for real estate, I've talked to you about this several times, right? Here in Toronto, we have a bunch of people, they look like they're geniuses. I mean, they bought a house at, I don't know, it doesn't even matter where, right? They bought a house for $500,000. Now it's worth $2 million. They're like, I'm a real estate investing genius. I made $1.5 million. And hey, you know what? Your receipts are better than mine. That's a really good return. But you're not a genius. You couldn't do that again. You just got lucky, right? You were in the right place at the right time. I have, well, I won't name any names, but anyway, I know some people. They bought a house a few years ago, right place, right time. They made a lot of money on it, and they don't think that they're geniuses or anything. I mean, they've recognized they just bought a house and got lucky. But lots of people could look at that and be, oh, well, that's such a good deal. We should just do that. Buy a house for $800,000. It'll be worth $1.6 million in 2 years. Yes, but no, it doesn't quite work like that, right? First of all, they had no idea that they were doing it, because if they'd known, why didn't they buy 5 of them instead of 1 of them, right? If you knew that your house was about to double in value, why did you only buy 1? Why didn't you buy every frigging house that was available to you, right? Because you didn't know. It was a mistake. It's an accident, right? And 2, if the market turns around on them tomorrow, they're going to lose the money because they don't really know what they're doing, right? Conversely, somebody like me, not to toot my own horn, I know what I'm doing, kind of. There are people who are obviously much further down the road than I am. But, I have properties that if the market turns on me tomorrow, they should cash flow. I mean, nothing is guaranteed. Technically, all my tenants could die and nobody could want to replace them, whatever. But they should cash flow and cover themselves, right? So that even if the market goes down and I lose money on the equity in the property, I should make money off of the cash flow, right? And that's something that a lot of people can't point to. That's something I could not point to with my stock deal there, right? It made lots of money. Sure, I had no idea what I was doing. I didn't know when to exit. I didn't know blah, 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 all the various things. And so ultimately, like I said, I didn't really end up taking home very much money out of this seemingly fantastic deal, right? So I think that, let me put it like this. I've likened real estate investing to bodybuilding several times before. I think that it's actually a very, very good metaphor or analogy. And the reason being is that both require dedication and repetition to show the results, and both show their results over time rather than right away. I think also both are fraught with misconceptions, right? People think, like, I'll use bodybuilding as an example. There are lots of people like, oh, bodybuilding, oh, you just take some steroids, blah, blah. It's like, try that. It doesn't work. You can't just take steroids to become a bodybuilder. Yes, steroids help you become a bodybuilder. Definitely. They help you get in shape. They help you recover faster. They do a lot of good things for you. you still got to do the heavy lifting. You still got to do the hard work, even if you're taking steroids. And yes, you will get there faster taking steroids for sure. Just like you will become a successful real estate investor if you hire a competent accountant, a good a mortgage broker, right? If you're talking to real good wholesalers and other good investors, you're going to get ahead faster than the person who's only read Rich Dad Poor Dad. There's no question about that. But ultimately, all of those people have to do the work to get to their desired destination, right? And in your case, the work, whatever the destination is, right? Because that's the first thing you have to decide. What are you aiming at, right? Are you trying to retire? Let's just say you're trying to retire. Okay, but then are you trying to retire at 60, at 50, at 40, at 30? When are you trying to retire? Are you trying to retire next year or in 5 years or in 10 years, right? And what does retirement mean to you, of course, right? To me, I wouldn't mind being retired. I think in the next 10 years, I probably will. And what I envision, what I mean by retirement is probably a household income of around $120,000 to $150,000. It's going to depend really on what the market does, because right now things are weird. If I want to remain living in this area, if I could live somewhere cheaper, then maybe I wouldn't need nearly as much income. That's what it is going to require, right? So now I have to reverse engineer how to get there, right? And I don't know, let's just say 150, make the number easy. Maybe that's $15,000 a year in cash flow for the next 10 years to be able to get to that goal, right? Whatever it is, you've got to have something to aim at and then measure, are you getting there, right? And I think, again, making offers consistently on a schedule, doesn't matter really what the schedule is. You might say, hey, Aaron, you know what? I only want to do it once a month. Once a month, I'm going to make 5 offers, something like that. I don't know. Sure, it's not as good as every week. I mean, I guess 5 offers a month is about as good as every week. So if you do 5 or more offers a month, then that's about as good as doing it every week. Every week is pretty good. Some people do every day. Some people do multiple per day, right? I was just saying, like, I think in the next 10 years, I will probably retire. And I told you what that looks like in terms of income. But for me, once I get to that point, then I think I might transition from my day job, which is currently a literal day job, to maybe spending probably not 40 hours a week, but maybe 20, just analyzing real estate and making offers, right? Because you'll get to a point where I don't need to spend any time working, so I can spend all my time doing that. And that's one of the things, right? Is people's wealth tends to start growing exponentially when they get to that point, because before, when my effort level was 1 deal a week, let's say 1 offer per week, right? If, again, these are just the purely BS number I'm making up, but let's just say if my hit rate is 1%, then at 1 offer per week, I'm going to hit a property that makes me money once every 2 years. But if I retire and I up my efforts to now 1 offer per day, 365 days a year, let's say take off 5 for various holidays and stuff. So 360 offers per year, that's 3.6 deals per year I'm going to accumulate, right? And if they all make the same amount of money as my previous 1 deal every 2 years, and I've effectively 6x my growth rate, right? And so that's the thing. And really, that's where the money is made, when you make the deal. There are so many. I keep going back and looking. Sorry, I gotta open this property, but I'm actually gonna scroll way down. I'm gonna go back a ways. There are so many properties. Here's a deal from 2019. There are so many properties that that we looked at. Here's one. I've got it in the notes. I'm on the things we should place an offer. November 6th, 2019. And I'm so sad I don't have a picture of this property. We looked at this property. Oh, no, I do. It loaded it. Okay, there we go. Look at this property in London. 254 Cheapside Street. They wanted $500K for it. We did the analysis. It did not cash flow. But we figured it would pay a pretty decent return over time. And we thought about making an offer. I don't think we ever did, if I recall correctly. Oh, shoot. This is that property. We did go to make an offer on this property. We actually did we did a walkthrough with the realtor, and we were going to offer on this property. And for those of you who can see the screen, it might be hard to read, but in my notes here, it says second last line or third last line. There is fire damage in the basement. The affected beams appear to have been bridged with new beams. We're estimating that the fire occurred more than 30 years ago. I kind of didn't want the house anymore after I saw that. And it was very funny to see. Like, I wish I had pictures of it to show you, but it was literally like there was a wood beam in the basement holding the house up, right? And above that wood beam, there was another wood beam, but this one had clearly been burned to shit. And it had, that black charring that the wood gets when it's been like sitting in the fire for a while and it's starting to like, I'm not really a fire guy, but like it's basically starting to coal or what have you. That was what the wood looked like. It's starting to charcoal or what have you. So you knew that like the fire must have been pretty intense at one point. Anyways, we couldn't tell, what was what, and we weren't about to pay a structural engineer or a home inspector to come and tell us because frankly it was like, we'll just walk away. But this property, even with that problem, which I didn't realize when I opened this particular analysis up, but even with this problem, I bet you would have made money on this property, right? Like, it's hard to say because this is at the upper end. I think this was like a duplex with an unfinished basement. Duplexes in London are going for like $300, $325 per unit right now. So that would make this worth $600,000, $650,000, which means that even at $500,000, I theoretically would have seen an appreciation of almost $150,000, right? In maybe 2.5 years. So this is the thing with the real estate really is that these things are moving and they're moving in the right direction. Again, such an important caveat. If you're buying an asset, right, that is producing cash flow, right? Obviously, if you're buying an asset that is costing you $1,000 every month, then it doesn't matter which direction the economy is moving in. That could really hurt you $12,000 per year in expenses. But if you're buying something that you can keep cash flow neutral, or even better, that's cash flow positive, then the time is so working in your favor that a lot of the deals that you think are not good deals, well, they probably aren't good deals, but they also aren't bad, right? In the sense that you'll do okay on them. Unfortunately, Dylan's not here today. I wanted to talk to him a little bit about Alberta. I know he bought some property out there, and people have obviously looked at Alberta for investing. He's going to do really well on the property that he bought out there, and the reason is very simple. Obviously, we've got the Ukraine, Russia, whatever thing going on in the world, and oil prices are going out of control. Right, and the Alberta tar sands contain oil that is quite expensive to extract, and so it is not profitable to extract the oil in the tar sands when the price for a barrel of oil is below a certain mark. The price has far exceeded that mark right now, so it is now profitable to run those oil sands operations again. And so we will see over the next couple of months money, people, resources, and equipment flowing into that area so they can get that oil production back online because it is now profitable for them to produce that oil. And in that profitability, we're obviously going to see a lot of economic activity in the Calgary, Edmonton, and Alberta markets, right? And so the people who have positioned themselves a year or two ago in those markets when there was very little oil industry activity are now positioned to realize a large capital gains as that market becomes flooded with oil money and people buy in. And, depending on how things go with the whole Russia, Ukraine, and the world economy thing, I mean, theoretically, if everything settles down, fuel prices could fall again and those oil sands could become unproductive once again. But assuming that doesn't happen, then we will continue to see more and more investment and reinvestment in the area, and we will see housing prices climb quite a bit there. In contrast to the prices falling that we're probably going to see in Ontario if interest rates continue to rise, right? So, well, I wanted to highlight that just because I thought it was interesting, right? I think obviously there's this narrative, the world's kind of going to hell in a handbasket with Putin and Russia and World War whatever, and I just thought that this was an interesting contrast, right? Here's an example of that very same bad news that everybody's worried about actually makes it so that these investors are going to make a lot of money, right? Because it's about positioning, right? And so they're positioned to take advantage and ride those prices upwards as oil pushes them upwards, right? And so because it's about positioning, right? And that's something you need to remember. That's another reason why the continual analysis is so valuable, right? Because a position that might work really well, over time, market conditions change, that position may no longer work well. And there's really no way to know except to watch the market and see what things are selling for and what things are buying for and how long things are sitting on the market. You know, if you're invested in the market, all of your properties, let's say, are worth $500,000, let's say. And you're invested in that market and you're watching the prices kind of falling, right? You're seeing like a house go on the market and the average time on market is going up from 5 days to 10 days to 15 days to 30 days to 60 days, right? Depending on where that's happening, that might be an indicator to you that this market is stalling and you need to consider repositioning yourself, changing your mix, right? Like what you own in that market, or perhaps leaving the market altogether, right? And so you're really not going to know that unless you're watching it, you know, week or month on month. So anyways, sorry, that's my way of saying, you know, get your reps in. Get your reps in. Really, truly try to do the analysis work. Keep a record, keep a log. I like to keep folders, so I make folders for analysis. I should be better. I should archive my folders by year, and I don't currently. I kind of just throw everything together. I've got a couple different folders on my 2 different computers with analyzed properties on them. But you should be, making analyzing properties and making offers, seeing what gets accepted and what doesn't. That's going to help you to become more and more calibrated to your market, and then help you to improve and eventually score a deal, score 2 deals, score 5 deals, score 10 deals. But none of it happens if you aren't taking action. And that's that little thing that you control. It's like, I don't control the market. I don't control Russia. I don't control interest rates. I don't control any of these things. But what I do control is I can sit down every single week and I can put aside an hour, not a lot, maybe 2 hours, and I can analyze some properties and I can make an offer. I can make a phone call and I can say, hey, I want to buy this property. This is the price I'm going to offer your customer, client, whatever, right? You can do that. And it might be scary the first time you do it. I don't know. I'm sure for a lot of us, we're not comfortable maybe making that first phone call. By the time you've done it 5 or 10 times, then it's just routine. It's just calling somebody and trying to buy the property. So get out there and do it. Get out there and do it. You make yourself very materially successful, for sure, if you go out and you do that. And I think I've said this here before, but I think that we should all, to some degree, not crazy and not out of proportion, but to some degree, we should all be chasing some material success. Because when somebody comes to you with some bad idea, and inevitably they will, it is only by having enough material resources to not need those people's help or assistance or consideration that you actually have the freedom to say no to things, right? To wax poetically about my own political opinion for just a half of a second, who knew that the cure to COVID was going to be war with Russia? I couldn't have predicted that. I mean, if you look at economic history, it's actually very obvious that would be the route that our politicians would try to scapegoat down. But nobody would have predicted that at the outset. And yet here we are. Okay. Now, obviously, war with Russia is a bad idea. And I don't think our political leaders, I actually don't have very much faith in them. So I won't even say that they don't want that. But I hope that they don't want that, regardless of what they do or do not want, right? If they get themselves involved in a war, or if they don't. And just think about how stupid it is to get involved in a war with Russia 6,000 kilometers away. Like, if you really think about that, it makes no sense. It'd be like Russia going to war with America over their policy of how they treat the Mexicans. It doesn't actually make any sense. And it's funny because America would totally go to war with Russia if they tried to mess with Mexico. But hey, whatever. It's a different situation when the shoe is reversed, I guess. they're going to try to send your kids to go fight this war, right? They ain't going. Justin Trudeau is not picking up a gun to fight, right? And I'm assuming that all of you are just old enough, right, that they're not really sending you to go fight, right? Like, nobody's sending me to go fight a war anymore. I'm just old enough that, like, maybe if the war went on for a decade and they were desperate for people, they'd want me, but they are not going to want me at the outset. So it's your kids who the burden is going to fall upon, right? And if you're in an economic position where you can say, F you, I won't do what you told me, then your kids don't need to go get their arms blown off in some stupid, pointless war somewhere, right? If, on the other hand, you are of the lower class and you're living paycheck to paycheck, guess whose kid is going off to war, right? And you don't need to take my word for it. You just need to look through history, right? World War II was not fought by the bourgeoisie, right? Whatever you want to say about it. It wasn't the rich upper class who was fighting World War II. I mean, to be fair, some people from the rich upper class did go and fight World War II. This is true, right? But no, it's largely people from the lower classes who don't have alternatives. They're the ones who get sucked up into this crap, right? And as a result, they're the ones who get involved. You know, I mean, the same would be true in Germany, right? If you want to put the shoe on the other foot for World War II, obviously we all think what the Germans did was awful. Well, who do you think were the Germans who went and did a lot of that stuff, right? It was the poor ones who, they weren't really in a position to say no when someone came to them and said, hey, gas some Jews, or hey, go fight some French people, or hey, go bomb some Brits, right? So I think personally, this is my own personal feeling, but I think that these people who act like being wealthy is a bad thing, those are actually the bad people in the world. Because wealth enables you, and I'm not saying we all need to be Bill Gates, that's crazy. But just having enough money to be able to say, you know what, this week, this month, this year, I don't need what you have to offer me. And if it's evil, or if it's wrong, or if it's immoral, or if I just don't agree with your direction, then I have the ability to say no. Right. And we used to live in a world where that was the average level of wealth, because we used to live in a world where your average person was a farmer. And so they had enough farmland where, even though maybe materially their life wasn't very good, they weren't worried about eating. They could feed themselves. And so they could say no to you. That used to be the kind of world we live in. And now we live in a world where a lot of people live in cities and they have absolutely no ability to take care of themselves. And so they really do, on some level, have to say yes to things because they're dependent. Right. And we've cultivated dependency as a society, and it's been a very intentional thing because, you know, the political elite understand what I just said, even if the lay people don't. And so I do think it is your moral imperative to try to give yourself some financial strength. It does not need to be a lot. Again, you don't need to be Bill Gates, but really and truly, I look at the world and I see obviously a lot of problems that I think that we all see. And one of the things that I don't see enough of is people who have the ability to say no, right? Just to pick one more time on Elon Musk, because Elon Musk is the truth. Elon Musk launched the Starlink satellite network for the Ukraine so that they would have their internet service would not be disrupted by Russian military strikes. Okay, and when he did this, the various people of our societies, right, the media and the political class, and that they all said, Elon Musk, you must censor your Starlink internet service so that misinformation is not spread in the Ukraine. And Elon Musk said, F you, I believe in free speech, absolutely. And this is my satellite network. I will do as I please. Because Elon Musk has the resources to say that. And so because he believes in free speech, he is able to stand up for his value because he has the resources to say no. Whereas there are lots of people who don't, right? And if you don't have those resources, you can't stand up for that good thing, that right thing, that true thing. And I'm not here to tell you what those good, true, right things are. Right? I have my beliefs, you have yours, and they may or may not overlap. I don't know. I'm sure a lot of them do, right? But ultimately, you need to have the power in your own life to be able to stand by those things. Right? And if you find yourself in a position where you are so weak economically that other people can bully you into doing what they want, then how do you stand up for the truth or for justice or for the things that you believe are right? You can't. You really can't. So, yeah, sorry, not to end on a heavy note there, but keep that in mind, right? And practice. Develop those muscles, right? And develop those habits and develop the wisdom that comes with time and repeated exposure to things. And if you do that, I guarantee you it will take you places, right? Because one of the things, I don't guarantee you it will take you in a straight line, right? There will be ups and there will be downs. You might buy a property that costs you $500,000. I just told you I made, I don't know, near $100,000 as a kid, a 20-year-old kid or whatever, investing on Take Two, and I lost most of it very, very quickly. Right? Making money is A, easy, and B, pretty meaningless. It's about how much of it do you keep, right? A lot of us make money that we immediately lose in a variety of ways, including but not limited to taxes, where we lose most of our money to, right? The question is about how much of it do you keep, and understanding that this is a skill and a muscle that you're building and that you're growing. And so if you earn $100,000 and you lose it, that's okay, because that was a rep. Okay. And you will learn again how to get the next $100,000. But if you never take the action to get the first result, even if you're going to lose it, then you never get to move on to grow your capacity to do it again and again and again. Right. Obviously, if I take myself as an example, I have this great story about the stock where I lost most of it being very dumb at a young age. I've made that money back several times over since then. As investments, like forget my income and work and trading my time for money. I've been able to make that money back just from investing, right? And not the same type of investments, right? But that's the thing, is I had to have that failure to grow, right? I had to have that failure to look back and say, oh, this sucks. Certainly losing the money sucked, right? Is there a way that I could do something similar but with less risk, right? And for me, real estate became that vehicle, which you probably can't get the 10x. That's hard. Real estate can't really do that for you, but you're very unlikely to lose it on the other side, right? So that's the thing. And you can definitely 2x, and also it's real estate, so it's worth a lot. And also you can leverage, so you can get pretty close to that 10x with real estate. So it's okay. Real estate's better than stocks anyways. But that's the thing, man. We all got to focus on that and really grow our capacity, right? Because that's what's going to make us successful, right? And so thank you for your time. I really hope that you'll take to heart what was shared with you this week, and maybe go out there and make an offer. There are lots and lots of properties for sale, right? And they doesn't need to be this market, right? You offer. I know there are people here who have an interest in Quebec, right? Make an offer there. I'm just talking about Alberta. Make an offer there. I wouldn't really recommend it because the tax situation is kind of complicated. But make an offer in the States, right? If you want. I mean, by all means. The States is tricky because you can definitely buy properties there, like cross-border from here, as we are. And you can definitely make money, but the tax situation, you'll get double taxed. That's the thing about it that kind of sucks. You've really got to take that into account. You've got to be finding deals that are really quite profitable, because the Americans are going to tax you and then the Canadians are going to tax you. And so that's tricky. And then also, if your end goal is to remain a Canadian, but to do that, selling those properties and collecting the capital gains, the taxes are going to kill you. So those are the things where that's why people, when they do that, they tend to work with an accountant or whatever, so they can do a better job. Okay. Anyways, like I said, I hope you have a wonderful day. Thank you for joining me, and hopefully we'll catch you again next week. There's my mouse. It's like, what did I do with my mouse? End the call for everyone. End the stream.